Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's Tuesday, my first recap back since I think last Wednesday. And last Wednesday we went over a plan on what could happen with the market and how to navigate it. And I'd say we're in a pretty similar spot. It could be the dog days of August. It could be that earnings season's almost over. It could be that this 2015 range just continues and frustrates as many people as possible, whether you think we're going to break down and you get squeezed short, or whether you think we're going to break out, you add to longs and the market comes in. That's been the narrative for the year. But you've had a very specific tape with things to do in certain areas, and it's just very, very selective. Just go right into the charts here. This is the range of the S&P. This has been your floor. It tested that floor way back when a few times in the end of June. You had that quick move up to the top end of the range. It did seem like we were going to break out of it. And then if you recall, right around here is when we lost that upper third and came right back in. So now the question is, are we building somewhat of a new floor there? So let's take a closer look so you can actually see the S&P, and the actual levels. So what do the bulls have going for? What do the bears have going for them? Okay, here is that low. Okay, back to the upper end of the range. Held a little bit higher. I wouldn't have thought it would come all the way back here, but maybe it just needed time. Came up. Bears are probably saying, oh, well, we have a lower high. The bulls are saying we have a higher low. And all in all, we have a new inside range. And that's what we're going to have to use to base some trades off of. If you're very tight, use 2087 as your stop. If you're short, you could probably use one spot right here, which is 2105, and then 2114. But overall, I think you could probably poll as many people out there. Nobody truly knows which way it's going to resolve. But at this point, we're smack in the middle, so at least it's getting tighter. And then usually you have some clues on which way we'll go by having leaders and having groups leading. And at this point, we don't really have that as much. Okay, you have the Qs, which if you look at the Qs, I guess you could say that they're holding the 21-day, which is good. I guess you could say that they're kind of above the prior breakout. So if the Qs are going to lead, you probably need to see a move above this. What is this? This is 112.50. Okay, you have a nice inside wedge here also that's getting tight. If we were to fail and go below, probably see a move below 110.85. So at least it's getting tight here. This was the group that went to new highs while most other sectors, did not. So as far as the banks, I know we've been trying to find a way to stay involved there. If you go to the XLF, this looks more like the Qs also. This looks like, you have this little wedge type formation, and you have some support here, from last week's low, or just say Friday's low of 2501, and see which way it resolves with defined levels. So use these defined levels to make your trades off of. I'll say two other things that I just kind of note, from the bullish side. The IYTs had a potent move and are kind of holding higher, and so are the industrials. So if those happen to act better, maybe the rally broadens out, and that would help the S&P leave this range. If it doesn't, I think we're just a little bit too narrow to really do anything substantial, especially over the summer. And plus, we're waiting to see what happens with rates, and I think the market wants liftoff. In my opinion, I think the market needs liftoff before we get a sustained move out of that range. But anyway, here is the small descending channel that broke above, hanging here. If you wanted a reason to be small in the transports versus level, it's giving you somewhat of a reason to be in that. If you look at the industrials, XLI, somewhat similar, but again, all these things are below most moving averages, so you have to be very, very careful on your entries. Okay, right now, you had a quick move, holding in there, maybe it continues. If you look at the XLE and you didn't have it tight, you had a quick move, okay, which was 2 days, and then right here when it pretty much broke this spot, you had to get out of the way, and then you didn't go back to the lows. So those are the the indices. As far as stocks, I talked in the morning call about the stronger stocks that could help show us if we have power. Netflix, Google, Amazon were the three strongest ones. Okay, Facebook trying to hang in there, and obviously we all know Apple's been a problem. Netflix was a grand slam home run for a lot of people. This was the one I chose last Wednesday when I was talking about on the recap, one of my positions long, and the reason being because I figured best in breed, okay, gap down, Okay, I mean, had its gap up after earnings, held the 21-day. So I said, okay, let me be a buyer versus this low of 113.88, whatever that was, because if I was in my seat, I'd be buying it here. So I took a feeler. So anyway, didn't make a new low. That was your day one. Then gave you a day two, gave you an inside day. So today, I think on the note, we talked about, kind of take out 115 and make a powerful move, as well as holding the inside range, and boom, what a move today. I was unfortunately preoccupied with other things, and I didn't trade this move to the upside, but if you did, congratulations. If you're short it, you're shorting one of the strongest stocks above the 21-day moving average. When momentum names are above the 21-day or even above the 8, they're not shorts, they're longs. Okay. As far as Google, definitely frustrating. Don't know what to tell you. I've lost money probably multiple days trying to play this little move above this spot here, which hasn't happened. Your first move lower was, when this wedge broke to the downside, and now, the jury's out here. What do you have? You have a huge gap, which is bullish. You have it above the 21-day, which is bullish. But in this little pattern, you could have a bear flag to come into there. So if you're a trader, that could be tough. So it's still considered in the stronger camp, and this Amazon looks similar, except for can't tell you exactly what's going to happen here if this wide range bar that it's been spending time in the bottom third is still in control when they sold the earnings. Okay, and we're going to continue lower, or we're just consolidating a big move that we saw. Remember this range when it broke above this 448? Wasn't that fun? To perhaps go higher and resume. So Amazon and Google, not so sure. Okay, but that'll tell us whether or not some power can come into high beta tech. Netflix, very thin, highly shorted. This was the one. As far as Apple's concerned, today was my first real active day in Apple. I haven't been that active in Apple in a while because the trade in this range has been horrendous. Here's your top end of the range. Okay, this was your bottom end of the range. Okay. Before I left, I said be careful of 122. If 122 gives out, you have an unfilled gap. It's below the moving averages. It could be weak. And then at least you had this one day right there to give you some clues to get out of the way before that, and then before that. This morning I posted a chart showing you, this gap potentially trading into it and getting somewhat filled, and it did. And the best trade happened when, it did that last stage push below, and then gave you a rally up before coming off. And at this point, people are like, are you going to take Apple long? I didn't. I might see where it's trading after hours, but it's really giving you no signal. It's definitely oversold. It's below every moving average. If you think it's going to come out with some kind of news of a buyback or this or that, or Uncle Carl's going to tweet, and you're going to miss something, perhaps be in some because if it gap's lower, chances are you could probably trade out of it. You do have what I showed you this morning also. You have this trend, basically broke. Okay, that's your intermediate trend. So right there, that if you're a fast money guy, that should have been your out, or we're not taking it into earnings. And then this more gradual trend comes in a little bit closer. Let's see, to here-ish, and that would pretty much take you back to a little bit below 110. So, here you are, a small spot. It's definitely oversold. Hard to be short. If you want to be short, maybe there. Here you're covering shorts, and now you're thinking whether or not this holds. Okay, but as of right now, as a momentum trader, okay, look at all these lines. When it came into this and went lower, remember I tweeted, I was long this day into that. I sold it. I'm like, you know what? Let me figure out what's next. And then this has been what's next. Unfilled gap below the 8-day, the 21-day, all of that, now below the 200-day. So now we'll see how many days do we stay below the 200-day. Okay, because if you stay below this for 2 to 4 sessions and there's no bids, all of a sudden, I don't care what the name is, you could see some lower prices. So we're coming into an area that's very important. Hopefully we get a good trade here, and then we'll figure out what's next. Facebook's trying to figure out what's next. Can it be the only social media name that stays constructive with a $300 billion market cap? If so, it needs to hold this area. So 91.80, if you're in it long, tier 1 at best, okay, and it's flagging. So if the market decides to go and they protect this stock, which they've been doing, maybe above 95, 96, that could be your long. If for some reason we get weaker and they're like, if Apple can't bounce and, every other name seems somewhat broken, this should be your out because there's a gap here and there's really the next moving average is all the way down there. So we'll see what's happening here. So far it's hanging in there, just not sure which way it wants to break out. I'm hoping it's to the upside. So this way we have another leader. If not, chances are not many leaders or things to hang your hat on. Fit's still hanging around, but it has earnings tomorrow. At least this gave you a nice trade Friday into Monday. Nice breakout above this wedge here, and then it gave you a gap up yesterday. Now it's trying to hold in here, and we'll revisit tomorrow for earnings. MBLY also gave you a gap up yesterday, but then was sold, and trying to see what's next here and what type of earnings it has. Hopefully it shows real growth, and if you have it in the drawer and you're going to hold it for the next multiple years or so, this showing you strength above the 21 days a trader. And if you had it in the drawer from when it had the red dog reversal down here, when it cleared the downtrend, or when we put it on Twitter there, I guess just know your risk going into earnings, and hopefully there's a trade thereafter, and then we could continue to trade the trend to the upside, as I do think this chip and this technology and this company is something special and something to learn how to maneuver moving forward. With all that said, I'm sorry I got to jump into a partner meeting. It's good to be back. We'll see you tomorrow at the morning call. Look forward to my note if you subscribe, and have a good evening. It's summertime.